Hi guys, good morning and welcome to Morning Trade with Money Control. I'm Karunya Rao and I'm here to help you navigate today's trading session with actionable strategies, sectoral trends and most importantly your queries during the show. So please keep commenting on our live feed so we can address your queries towards the end of the show. But let's kickstart the show with all the big headlines and the trade setup that you need to watch out for. European markets were choppy yesterday as investors awaited the start of the US Fed Reserve's Jackson Hole Economic Symposium. Stoxx 600 was up 0.4% by afternoon trade, having given back gains of more than 0.7% earlier in the day. Wall Street's main indexes rose in early trading session on Thursday. Dow closes 300 points higher, extends rally to second day ahead of Powell's speech. IT sector was one of the worst casualties of the recent market volatility. Does the fall make a case for closer look at the tech companies we discuss on the show today? What we also need to focus in on is the RBI policy meeting. Let's talk about that as well on the show. And we will be putting the stocks in the spotlight, which includes the likes of Lupin. There is also SRF and railvikasnigam. But first, all eyes on the RBI policy meeting and its outcome, which is slated later today. Morning, Lata. Thank you so much for joining in to help us understand what to expect. Talk to us about the 50 basis point rate hike that the street has already factored in. What are you picking up? What should we expect as far as the fine print and the commentary is concerned from the RBI governor's speech?
Yep, we are all going with 50 basis. We don't know, the Reserve Bank can surprise on the downside. They can go with a 35 as well. And of course, they can do even a 60 and take it all the way to 6%. So we don't yet know. The CNBC TV18 poll, as well as other polls out there, I do a Citizens Monetary Policy Committee, a shadow committee of external experts. All of them are looking for a 50 basis hike. And therefore, that is priced. In fact, if you looked at the one-year OIS, the overnight index swaps market is the most liquid market. And that one is factoring in a peak repo rate of 6.75 or more. Now we are standing at 5.4. Today's 50, if it is 50, can come to 5.9. We still have a long way to 6.75. The market is already pricing it in. So what the bond markets will watch out for is what next? Do they throw any hint about what is the peak repo rate? I mean, do they say that more needs to be front-loaded? Or do they say that inflation in India is peaking off and crude prices will have a benign impact? The forecast they have of inflation is 6.7 and growth is 7.2. They may roll back growth a bit. Because, the first quarter GDP came in much lower than what RBI had forecast. So they will roll it back just arithmetically to about 7% or even less. But everybody will watch out for what they have to say about inflation. It is unlikely they will change it because there are so many moving parts. And even if global rates have fallen, Indian prices have not fallen. So Reserve Bank may not even change that. What people will watch out for is whether they change their stance. At the moment, they are saying that we are in a stance of removal of accommodation. But most of the liquidity has already been taken out. The banks are actually going to RBI and borrowing from the RBI's repo window. So will they change the stance? If they change the stance in such a way that it sounds a little hawkish, then again the market could react negatively. The RBI is not going to tell us what is the peak rate. They will say they are data dependent. So in the end, you may not be any wiser after the policy. But the market will watch out for any nuances on whether they are worried about inflation or whether they are worried about the currency. Currency will also be top of the mind. The RBI will repeatedly say that we do our policy based on domestic factors, not on external factors, not on what the Fed is doing. But there can be some hints about what they make of the external sector. And finally, whether they announce any steps to bring in more NRI flows, all that will be watched for.
Okay, let's also talk about the current account deficit and market borrowing numbers as well. What would be the impact today on the markets? What's likely?
Well, the current account deficit number is lower than what the street was fearing. Everybody was expecting a 3.5% of GDP as current account deficit, about $30 billion. It's actually come in at $24 billion, so only 2.8%. Rupee will, from the NDF market, you can find out it's already starting on a very strong note. There are other reasons why it will start strong. Today, the dollar index has peaked off from 114 to 112. You're seeing a fair amount of appreciation in the Chinese yuan. It was at 7.22 yesterday. Today it's at 7.12. Serious appreciation. Appreciation in the yen, in the won as well, Korean won. All these are indicating, and the NDF market, that the rupee is going to start strong, probably around 86.40, 86.50. Sorry, 81.40, 81.50. A big change from the 81.86 that it closed. The bond market also will start on the front foot because the government announced the borrowing program, which is a little lower than what the street was prepared for. The street arithmetically takes the full year market borrowing, subtracts the first half borrowing. They were getting 6 trillion, but the actual announcement is 5.92 plus 16,000 crore is green bonds. So what will come as normal Government of India bonds is only 5.76. So the market is deliriously happy. You should expect bond prices to rise and yields to fall at the start. And then, of course, everything will depend on the policy.
Okay, so some relief coming by
Yes.
for the Indian currency at least. You almost scared the viewers by saying 86.
Sorry,
but yeah, thank
I
you so much,
apologize.
Lata, for thank you so much for joining in and for helping us understand what to expect from the RBI policy meet, the nuances, the finer print, and of course, an update on the CAD. Okay, let's kick off on what's happening on the markets front. We have Kunal Shah joining us from LKP Securities. Morning, Kunal, and thanks for taking time out. Today is also the start of the fresh series. Let's also understand how the market is placed ahead of the RBI policy meet outcome as well. What are the technicals hinting at?
Good morning, Tarunya. I think what we are seeing on the markets since the last 1 week or so, there has been a brutal sell-off which is happening at the current levels. Now, what is the outlook from the current levels? So, if I talk specifically on Nifty, Nifty has been trading below its 200 DMA, which is placed at 16,985 levels. And even in yesterday's trading session, we opened gapped up, but again we saw a sell-off in the entire day, and the market closed at day's low. Now, on the lower end, the next support stands at 17,615. That is where the next 100-day DMA is placed over here. So you can say there is a confluence of supports which are there on the lower end, where the market is trying to gauge some momentum over there. But absolutely, there has been no respite by the sellers. There has been brutal selling which has been happening since the last 6 to 7 days. Now, today being a key event, I think that is where we are trading at a very critical support zone. If 16,700 is breached on a closing basis, this will again further aggravate the sell-off towards the levels of 16,200, 16,000 zone as well. So currently there has been no such signs of any buying which we can see at the lower levels. It has been particularly dominated by the sellers on the higher end. On the higher end, I think 17,100, this is a level which if we take out on a closing basis, that is where the buyers will start gaining the momentum, and probably we could see a pullback rally towards 17,400, 500 levels. So for playing on the long side, since intraday it is going to be extremely volatile, since we have a key event, I think 16,700 should be a stop loss for all the long positions. If that is taken out, then one should definitely exit your long positions. Similarly, for the Bank Nifty, which was the outperforming index in the recent rally, what we had got. Now, Bank Nifty has not breached its 200 DMA. So clearly, we can see there is still 1,000 points on the downside, which is left for Bank Nifty to touch its support of 36,500. That is where the 200 DMA is placed. So for Bank Nifty, as we say, it's an RBI policy. So again, the volatility is going to be very high. It's better to, I think, be safe in the market, let the event pass out, and then probably take a conclusive trade on it. So for Nifty and Bank Nifty, my outlook remains sideways. For long positions on Nifty, 16,700 should be a stop loss. And for Bank Nifty, it should be 36,500.
Okay, all right. Let's also put the spotlight on some stocks that could be buzzing in trade on the back of news flow. The first one I want to flag off is Lupin. They've bagged US FDA approval for Mirabegron extended release tablets in the US market. It's essentially a generic equivalent of Myrbetriq extended release tablets of Astellas Pharma Global Development Inc. So US FDA approval for this particular generic in the US market, some positive news flow coming in. Let's talk about the stock as well. Lupin, last 1 month, very flattish moves. Yes, it has seen very volatile, extreme moves in this last, 3-4 weeks. But it hasn't been able to hold on, either way, on the upside or on the downside. So tell us what's happening on the technical side and what lies ahead.
See, Karuna, if I specifically talk about the Lupin, the stock has been a massive well destroyer in the recent times. The stock has definitely underperformed the market by a huge way. And now, since the last 1 month or so, the stock has been trying to form a base formation at the lower levels where we have seen some buying. But I think still a confirmation is needed on the upside. The stock is trading below its short-term moving averages, that is of 50-day, as well as of the 100 and the 200 DMA. So I think the trend is definitely on the downside. For a trader's perspective, I think 680 is a level which one should keep on your radar. If that is taken out, I can see some rally towards 700, 710 kind of a zone. So the stock is still stuck in a sideways territory. With the positive news, what we got, still the stock was not able to cross the level of 680 on the upside. So 680 is a massive hurdle. Once that is taken out, we can see some short covering moves towards the levels of 700, 710 on the upside.
Okay, all right. How about SRF? That's the second stock I want to flag off. It's commissioned a facility to produce 300 MTPA of P38 at its Dahej plant. The aggregate cost of this particular plant or project rather is going to be close to 60 crore rupees. Now SRF last 5 days, if you look at the movement, it has been quite exciting and optimistic for the stock and for its shareholders as well. About 50-60 rupees added on the upside last 1 week. What's the way ahead?
See, Karuna, if I talk about the chemical space as a whole, I think SRF is the best stock which is placed either it's on a fundamental or whether it's on a technical front. I think the stock is going to create massive wealth even going forward for a lot of investors and traders. Now, as we speak, that Nifty is trading below its 200 DMA. Bank Nifty is going to be around the levels of its 200 DMA. And this is one stock, SRF, which is still trading above its 200 DMA. That is what we call as a relative strength. And even if you compare with all the chemical names, the chemical stocks have seen some good sell-off in the recent times and they have been trading on the lower end. But now this is one stock, HRF, again a higher high formation which has been happening in the stock, a very good uptrend which is still intact in the stock over here. So I think definitely it's a buy from the current levels as well. The risk reward is favorable. The lower end support, what I see on the stock is at 2400 level, which is where its 100 DMA as well as its 200 DMA is placed. So I think it's a very good risk reward setup what you are getting right now. 2400 is a support on the downside, and upside levels what I can see is 2800 to 2900.
Okay. Let me bring up the third stock as well on the list, railvikasnigam. They've bagged a construction contract for 4-lane highway from Samarla-Kota and Achampeta junction from the NHAI. The contract is part of Kakinada Port to NH connectivity, NH16 connectivity in Andhra Pradesh. It's going to be in an EPC mode with a cost of close to 400 crore rupees. Railvikasnigam hasn't been able to really do much last, not just 1 week when it slipped quite a bit, but also in the last 1 month or 3 months, if we look at the chart, rather sluggish it's been.
So if I talk about railway stocks, Karunya, we have seen some buying momentum in the last couple of days, which has been happening. But specifically, if I talk about Railvikasnigam, as you mentioned, the stock has been doing nothing on the chart front, whether it's on the technical front over here. So on the higher end, what I see is that 37 is the level where we have seen multiple resistance zone. So 37 has been the case where the stock has touched those levels and then we have seen a correction in the stock. So it is not able to surpass its hurdle on the upside. On the lower end as well, if I see 31 is a very strong support from where the stock is trying to hold. So this 31 to 37 is the range where the stock is trading. It is not giving a decisive clear move on either side. The chart setup looks very good. I think once it trades about 37 level, then I can see a very swift momentum coming in the stock on the higher side toward even 45-50 level kind of a zone. So for the current levels, I think it's in a just a sideways territory. It's an avoid for me. 37 is a level which one should keep on your radar. Once that is taken out, expect 45 to 50 levels to come very soon in the stock.
Okay, all right. How are you reading into banking stocks technicals as well? Today is the RBI policy, and typically a lot of these stocks react to what sort of comments the RBI governor and the members of the MPC also give. So, how's the banking index and some of these individual names? How are they looking?
So if I talk about the Nifty Bank Index, or what we spoke is that Nifty Bank was the outperformer, but recently the index had given a rising trendline breakdown on the technical chart. So the breakdown has already happened. We have seen 6 days of consecutive selling which has happened. The index is now coming to its very critical support zone of its 200 DMA, which is placed at 36,500. So I think definitely the risk reward is not favorable on the long side. For the short side at the current levels, I think 36,500, as I mentioned, one could keep it as a stop loss on the downside, and probably could play for a pullback rally on the upside towards 39,000 kind of a zone. But as I said, the volatility is going to be very high, so one has to be very cautious when it comes to trading on the Bank Nifty index. My ideal suggestion would be let the event pass off, let the market settle down, and probably then we can have a clear-cut view. Coming to the stock-specific approach on the banking space, I think this is one of the good opportunities what we are getting on the private banking space. The stock on my radar is ICICI Bank. I think the stock is on the technical front, even on a larger time frame or even on a shorter time frame. I think the stock is giving a very good ideal opportunity to again create fresh positions on the long side. So I think ICICI Bank, even from an investment perspective and even from a trading perspective, looks very good. Could be added on any dips to what you get on the higher end. I can see the stock becoming a four-figure as well on a longer time frame. So it could be a four-figure stock going forward. But even for a trading perspective, you can expect a 5 to 6% kind of a rally once the RBI policy gets settled down. So ICICI Bank is a stock picks, and on the PSU banking space, if I talk about, I think SBI is one stock which one should keep on your radar. It had recently given a good breakout on a daily chart. It has corrected and again retested the same support levels. So I think SBI also looks very good. These are the two top picks from the banking space which I look are very attractive on the technical front.
Okay, all right. Let's move on and talk about some viewer queries, address some viewer queries as well. The first one, this is from Vignesh, and he wants your view on Infosys, and he's also asking if any of the other IT stocks look good right now to buy into. Any view you have on IT index, IT stocks, specifically Infosys?
See, I think, Karuna, if we talk about the IT space as a whole, it has been a massive underperformance because of the concerns what we are having in the US markets. So there are predictions that US might go into recession in the next year, which the market is already discounting. We have seen the Nasdaq, which has been trading at a 52-week low. There are brutal sell-off which is going on. And that is why that is impacting the profitability and margin of the Indian companies as well, because a lot of this Infosys, TCS do a lot of client servicing to the US market. So definitely IT is going to be under pressure in the near term. I'm not very bullish on the space in the very near term. So whether it's Infosys or whether it's a TCS, for an investment perspective, I think on a longer term horizon, definitely IT will bounce back. But for a short term period, if you want to look for a trading perspective, I think still a 10 to 15% correction is left on the downside. Now, from next month, we will be having the IT results which will be coming out. So that is what the street will be watching, and what will be the forward guidance margin, what the IT sector will give us. So I think IT as a space should be an avoid. Don't try to jump in right now for a trading perspective. Still, there could be a correction which could be pending into all the IT sector and the IT stocks as well. So whether it's Infosys, whether it's a TCS, whether it's a Wipro, or whether it's an HCL Tech, I think it's a complete avoid at the current levels. You can probably do small case kind of investments over there, SIPs, that could work out for you guys. But I don't think trading at the current levels on the long side is looking very good.
Okay, all right. Moving on to Chirag's query, he wants your view on Ujjivan Small Finance Bank. If I look at the 1 month performance, stock performance of Ujjivan Small Finance, it looks like a bell curve, which clearly is not a good indicator because it did see a decent spike last 1 month, at least last couple of weeks, and then it gave up those gains to largely trade flat after a month. What's the way ahead for this particular counter?
See, I think if I talk about Ujjivan Small Finance Bank, see the banking space was doing very good in the last 1 month or 2 months, where we had seen a massive outperformance, and Ujjivan was extremely trading in the oversold category. I mean, no one even was talking about the stock if I talk about 3 to 4 months back, and suddenly in the last 1 month, as you highlighted it, that the stock has seen some good performance on the higher end. But I think the stock is still in a very broad consolidating range. It is trying to form a base at the lower levels. Probably it will take a lot of time over here. It will spend a lot of time going forward. And then probably we can see some positive move that could come on the upside. So for a trading perspective, on the lower end, 19.5 is a support zone, and on the higher end, 26 is a resistance. And these are the two levels in which I think the stock would consolidate for quite a bit time. So the view is not clear at the current levels. The structure is starting to become very good, but still needs much more confirmation, which the time will tell you once the chart goes ahead. But overall, the setup and the momentum is likely to build on the long side. Even if you want to trade on the long side, I think one can buy it with a stop loss of 19 on the downside and then look for targets of 25 to 26 on the upside.
Okay, all right. Moving on to the next query, and this is from Abhilash. He wants to know your view on IOC, Indian Oil Corporation. The stock again has slipped quite a bit last 2-3 weeks. What's the way forward?
Karan, if I talk about IOC, I think it has been a massive underperformance. Even you talk on weekly, monthly, or a daily chart, the lower high, lower low formations are continuously intact. So there has been no respite. There has not been a single point of buying what we have seen from the current levels. But for a trading perspective, in yesterday's trading session, we saw some good spike coming on the lower end. Now, if I look at the RSI, that is the relative strength index of the of IOC. It has been trading in a deep oversold territory. So somewhere around the levels of 25 to 24, whenever it enters that zone, we have seen some rally on the upside. And currently it is trading around 28, 27 kind of a zone. So we are in an oversold territory right now. So a bounce can be expected from the current levels. So just for a pullback rally, the risk reward looks very good. So one can buy at the current levels as well. 63 would be a very good support on the downside. And on the upper end, I can see 71, 72, which could come into the stock.
Okay. I just want to quickly address one more query. This is from Kiran, and he wants your view on Jindal Steel. Jindal Steel also, it has seen a fair amount of volatility last 1 month, largely perhaps in line with the volatility we saw in the metal space, as metal commodities as well. Talk to us about what's happening here on the technicals.
See, that is what exactly you pointed out, Karunya, that metals has been a space where we have seen some brutal sell-off which has been coming. And now metals has been trading in a very big oversold territory. Now, specifically, if I talk about Jindal Steel, the stock after a massive underperformance is showing me signs of reversals on the daily chart. The stock is forming a higher high, higher low formation on the daily chart. It has taken multiple times support around the levels of 380. And currently, we can see a very good risk reward at the current levels where it is trading at 418 levels. So I think one can place a long bets at the current levels for the rally of 450 to 460 on the upside is what I'm expecting. The chart is looking better compared to the other metal space or the other metal stocks what we have. So Jindal Steel could be a good bet on the long side from the current levels.
Okay. Kunal, before we let you go, want to also understand what are the stocks that you are keeping on your radar?
So yes, what we have been seeing is that in the current scenario, that pharma has been a space which has been outperforming a lot. And pharma as a sector has been neglected in the recent times. In the last 2 years, we have seen pharma giving us absolutely no returns. And on the technical charts, if I talk about pharma, this is a time where we are seeing some bullish reversals happening on the chart. So pharma could be a space which is ignored by the majority of the crowd, Now, I think when the markets are so volatile, where there is uncertainty in the global markets, when there is uncertainty in the domestic market as well, pharma always acts as a defensive space for us. And I think this is a very good time to add on to pharma stocks as well. So my top pick from that would be Cipla. If I talk about Cipla, the stock is trading at its 52-week high. As we say in the market, buy your strength, sell your weakness. So this is where the strength is clearly seen on all the pharma names. And specifically, if I talk about Cipla, the stock has formed a rounding bottom formation on the daily chart. It has given a fresh breakout even in yesterday's trading session. One can buy at the current levels as well for a trading perspective. 1050 would be a stop loss on the downside. I'm expecting levels of 1200 on Cipla on the higher end. So pharma as a space would continue to do well, and that is where I see the entire buying momentum, which is likely to continue in the near term. Now, the second space where I'm talking, where we can see some bullish momentum, is the shipbuilding space. So shipping stocks has been doing quite well. We have seen even in this corrections, the stock has seen some significant rally. And recently, one stock, the name is Mazda, which has been trading in a very good uptrend. Even in such kind of volatile markets, we are seeing a higher low, higher high formations in the stock. An absolute uptrend which is continuously going on in the stock. Yesterday also the stock gave us a fresh breakout. We are seeing market trading on the lower levels, but the stock is giving a fresh breakout with volumes on the higher levels. So I think there is still upside left in Mazda from the current levels. Currently trading somewhere around 460. One can buy at the current levels as well. 440 is a very good support on the downside. I'm expecting targets of 485 to 490 on the upside.
Okay. All right, Kunal. Thank you so much for joining us and flagging off your preferred picks in the market and addressing a host of our viewers' queries as well. With that, we're going to wrap it up on Morning Trade. Thank you so much for tuning in.